The Japanese are number one savers in the world. And what do they save? Yen and T-bills, US T-bills. I mean, Japanese maybe get admitted to Harvard and Princeton and Yale, but they don't know jack about money because they save yen. I would never save yen. I wouldn't even use yen as toilet paper. That's how bad it is. But the Japanese proudly save it, and the government prints trillions of it. This dollar has come down, and these guys are still saving this toilet paper or yen or pesos or euro. What do you think of my comment? Would you save the yen?
No, I wouldn't save the US dollar. I wouldn't save the yen. I wouldn't save any paper currency at this point. They've been printing money so fast, it seems to get worse and worse every year. And the dollar's going nowhere but down.
No. And it's getting worse. I mean, just recently, within the last 6 months, when Silverado and Silvergate, where those banks were, when they tried to stop inflation by raising interest rates, the bond markets collapsed. And when the bond markets collapse, so does the stock market collapse. And we have a baby boom generation, my generation, we're in serious trouble. Serious trouble because they're saving paper, stocks, bonds, mutual funds, ETFs, things I wouldn't touch. I mean, you can do it if you like. I don't have to because I own the physical asset. I own the mines. I own businesses. I'm an entrepreneur. But so many people are being set up, Kevin. Wouldn't you think? Don't you think so? I mean, my generation, not so much yours. Your generation still has time.
Yeah, they are being set up. And really, Robert, I look for tipping points. And the tipping point, when they really started printing up a lot of money, goes all the way back to the year 2000 when Alan Greenspan, after the dot-com bubble, just started printing money like crazy. People don't understand, but we had $5.6 trillion worth of debt in 2000. I mean, on balance sheet debt. And now we're at 33 trillion. What happens to real money when that happens? If you go back to 2000, the gold market was trading at $275 an ounce. Silver was about $3.50 an ounce. 2000, silver's $25 an ounce. We've added so much paper money, it's making the value of tangible assets worth much, much more. So that's what people have to get wrapped around in their head. Every time they print more of this paper money, that becomes worth less and the tangible assets become worth more.
And right now, the next hot new thing is that, what's that, AI, artificial intelligence. I did a talk at my friend Ken McElroy's event. Somebody said, what is AI? I said, a college degree. you don't learn anything about money. And you go see a financial planner who's only rewarded by selling you paper.
Yeah.
Financial planner will not recommend gold or silver because they got no commission from it. Is that correct?
That's right. I mean, they don't want to recommend that, which is really sad because if we go back to 2000, I always use this example and some people, agree with the time period. Some people don't, but I like using long-term horizons. In 2000, if you would have invested $100,000 in the stock market, forgetting about dividends here for a second, today that'd be worth about $320,000. If you would have invested $80,000 in the stock market and $20,000 in the gold market, that's worth $385,000. You picked up $65,000 extra dollars in your bank account over that time period by investing just 20% in precious metals. Why? Because they print up more and more of the paper money, the fake money, and the tangible assets become worth more and more. I mean, look, you've lived it. You started this a long time ago with your education about real estate and precious metals. Those are tangible assets that have appreciated in value. You would have done very well by owning those and gotten away from that paper dollar.
Right. I'll just say I don't trust anything they can print. I mean, it's that simple. I own oil. I don't own Standard Oil or Exxon. I own the oil in the ground. I don't want anything they can print, but that's me. But that's what Rich Dad stands for. We don't recommend going to college and getting a college degree and then your PhD and then look for a job. I mean, oh my God. Especially today because, I don't been listening to records and what's happening with AI. Unemployment's about to go through the roof. Records is calling for tens of thousands of people to be laid off simply because the economy is sliding into a recession, possible depression. And all the manufacturing companies throughout Europe and all that, they don't have jobs. They don't have any work coming in. And China, China didn't save the economy. So here we are in, August, July of 2023, and people are still going to school, looking for a job, saving money, putting the money in a 401k full of 401ks and IRAs and all this other, mutual funds and ETFs. Anything you can print, I don't want to trust, but that's me. I'm not recommending you do what I do. But that's why all these years I've been on Kevin's program saying buy silver. And of course, has anybody bought silver? No. They hang on to that yen.
Oh, yeah. They love that paper dollar. It makes them feel rich when you can look at it in your bank account. Really, I think that's the allure of everything. Hey, I see how much money's in my bank account. It's absolutely doing nothing. First, you weren't getting any interest. Now you're getting a little interest that's still below the rate of inflation. So it's not helping anyone at all. And like I said, your education for people is so important, especially now with this AI and how much money is getting printed, that people really should start listening here.
And how many people will lose their jobs in a few more years? I mean, it's going to be massive. It's massive.
Well, I think it's going to be massive. And I'm just looking at our office building here, Robert, and about 25% of the building is completely empty. I just re-signed my lease for the same amount of money in my lease per square foot that I signed 8 years ago. They had to do that because any more people leave this building, the bank won't even refinance their loan going forward. So, right. They're just forced into lower and lower lease rates. But that gives you some sort of an idea. 25% of a building in the middle of Los Angeles is completely empty and they can't fill it up.
Kevin, I saw the light about 30 years ago when California tried to tax my worldwide income. And people don't know what that means because they don't have worldwide income. But if you're an entrepreneur, I have income coming from all over the world. And so they wanted to take all of that. I said, adios. And we left.
Oh, sure. Hey, not only that, if you leave the state, they want to keep taxing you after you leave the state. So it's not a tax-friendly state at all. This money printing is going to continue, and the government has no choice but to print money. There's absolutely no choice but to print money. It's not only do they not know anything else to do, but I'll give you an example. We'll have a fun game here, right? I'll prove to people you can't stop printing money as the United States or basically any other country. So you and I live on an island, and you're the banker because you're a smart guy, and you have all the money, and that money is 10 shells. So the whole island's money supply is these 10 shells. And I come to you and I said, Robert, I have this incredible entrepreneurial idea. You look at me and you say, that is unbelievable. I will loan you the 10 shells at 10% interest. I take those 10 shells, I spend it to start my business. At the end of the year, I get all 10 shells back and I come and I give them back to you and you put me out of business. Why? Because there isn't an 11th shell to pay you the interest. You as the banker have to print it up out of thin air so that I have the interest to pay you. That is what the government does in banking. They have to print more money. So that piece of paper that you keep holding up is absolutely worthless. It's going to get more and more worthless over time because you can't stop printing money. Every dollar they print, that shell just became worth less and less and less. Yeah, that's where we're headed. People don't understand.
We're going to pay you 3% interest. Inflation is running at 6%. I mean, can you do the math? Let's say I'm getting 3% interest, let's say, and it's running at 6% inflation. What's wrong with the math?
Yeah, and the CPI index is all messed up, so that doesn't even calculate things like taxes and the real thing.
Yeah, we don't use those words here. CPI is consumer price inflation, basically.
Yes.